The US Federal Reserve is going to cut interest rates today for the first time since 2024. At least that's the consensus. 0.25% cut seems to be almost guaranteed, but there could be a chance that we get surprised and a 0.5% cut could happen. So what is the implication for this? Does this mean that the markets are about to massively pump? Or is this actually bearish and is the market about to crash in a sell the news fashion? Well, I want to share this data with you up above, as you can see here. So both at the beginning of 2001 and later on in 2007, the interest rates were cut, and that led to massive downside in the months that followed. We had the 2001 crash and the 2008 crash after those rate cuts happened, and those were both 0.5% rate cuts that started the downward action. Now, you can also argue that there is data like this, what I'm putting up above, is that if the S&P is near or within 2% of all-time highs when the rate cut happens, that 20 out of 20 times, like this data suggests, in 12 months the markets will be higher. So the question is going to be, what are we going to get and what is the effect going to be? Also keeping in mind that we are now approximately 30 days away from the maximum length that Bitcoin has ever gone on after the halving. So we are within a month of max cycle length territory. So that means we are in a position where things are getting very, very tricky. We are technically closing in on a point where the markets could absolutely crash and a cycle peak top could be in. We're also at a position where if they keep the money printer going enough, if they inject enough liquidity, they could certainly still continue to push these markets up even more and more. But there are so many models that are suggesting we are completely overvalued, especially in stock markets. The Warren Buffett indicator is at all-time highs. We're at levels beyond the dot-com bubble on many, many models. So it's really a crazy situation where we're in right now. The data suggests that we probably are very close towards a massive, massive correction. But at the same time, markets can stay irrational longer than you can stay solvent, or longer than things make sense. So if they continue to artificially pump it up, we could still see a spurt upwards. What do you think is going to happen? What is the effect of the rate cut going to be on markets for the next 30 days? Let me know in the comments down below.